Hey, welcome to Neppy Invests. So it's a warm and humid night in Brisbane tonight, and I sort of disagree with that because I was watching the cricket today, and I'm recording this on January the 15th, and I'm mentioning how hot and humid in Brisbane, and I just looked at the dew point temperature and I went, this is not humid for Brisbane at all. If you don't know what dew point temperature is, it's what we meteorologists use to view how humid it is. So dew points today were about 16, 17, and that's not humid at all for Brisbane. It can get to 23, 24 easy. So welcome to this warm and not so humid Brisbane night, and it's time for the week 9 update to my portfolio. In many ways, it was a disappointing week because quite a few companies had, or will say they underperformed the market, underperformed my expectations. But in other ways, it was a very exhilarating week because we had one company shoot the lights out. And I'm going to give it away here. And that company is now my best performing company, and it's a company I've held for 3 days. So I've given away that I did make one purchase this week and no sells or no disposals, I suppose we can say. And before I get into what that purchase is, and if you actually look at some of my other videos, you actually know what that purchase is because I've sort of given away because I actually did a video on this company. But before I get to that company, just going to look at the overall market, look at what the XJO has done in the past week. It's fell off 0.63%, so it hasn't really done much this week. In fact, the XJO continues to trade between a range of 6,600 and 6,800. Of course, if it goes above 6,800, that's bullish. If it goes below 6,600, that would be bearish. And I have no idea which way it's going to go. I don't know what the stock market's going to do over the next year or so. No one does. You'll hear all people say things about, it's going to be a very good year for the stock markets. They have no idea. No one knows what's going to happen. The only way we're going to know is if we start to see a trend down or a trend up, and by the half-year mark. And even then, we could see a correction or two. So who knows? So what I do is I just trade what's happening in front of me now. So if it goes above 6,800, that will be bullish. If it goes below 6,600, that will be bearish, and it could be a bit of weakness in the next month or so. So this is the acquisition I made this week, and it's Stone Horse Energy. So it's a very small company on the ASX, and this is it here. So only a market cap of $5 million when I bought into the company. Now, I've been following this company for quite a few months. In fact, since August the 18th, when they made an announcement and we saw the share price pop up on really high volume. That's one thing I really look for every day in the stock market is those sort of little indicators of a potential burst of a stock price in a company. And I'm put onto my watch list, and I've just followed it since then. And then the other day, it burst through 1.5 cents, not a dollar, 1.5 cents. That was actually quite bullish. That was a price of resistance. And when it burst through that on good volume, that's when I thought I might buy it. And then the next day or two, there was an announcement. And based off that announcement, I decided to buy almost immediately. Put in a bid at 1.8 cents. It opened at 2 cents. Putting that bid at 1.8 cents. I thought it might have drifted back to 1.7 or 1.6, but the low of the day was 1.8, and my buy bid was bought out. So 1.8 cents. I wasn't sure what the price was going to do over the next few days, so I bought this on the Wednesday, and lo and behold, the share price just shot up on the Thursday and kept on going up on the Friday. So overall, it went up 67% since I bought it on the Wednesday at 1.8 cents. Finished the week at 3 cents, quite bullish finish. A very large volume. You can see the last 2 trading days were quite significant volume days. That's exactly what I want to see. My only concern is just the amount of increase in the share price, 67% increase in share price. You're going to see some profit taking, but I'm hoping a lot of the profit taking will be met by buyers who are interested in the story of Stone Horse. So if you're interested in Stone Horse, look at my other video, and I'll just talk briefly about the company and why I did buy it and why I do like it. Now, my previous buy was BrainChip, and I was very close to selling BrainChip on Tuesday, but I just came off a night shift, and I've made really rash decisions in the past when I've come off a night shift. I've decided I shouldn't make any decisions just off a night shift. So I was very close to selling, and at one point I thought that was a mistake because we just saw the share price just drift back and back. So I was close to selling about 61 cents. and looks like the low for the week was around 53 cents or so. So I thought I made a mistake not selling when it was pretty obvious to me when I looking at this that was the sell point. There was a bit of a dead cat bounce. But in the last trading day on Friday, the 15th of January, we did see the share price start to level off. So that's quite bullish what we saw in the last trading day. And the share price finished at 58 cents. So I could have sold it at 61 cents, then maybe bought in at 58 cents. But there's very little gain in that. So now let's go to some of my longer term holds. Now, Dusk is a retail company. Now, if you have been holding any retail companies over the past month or so, you've done very well. We're right now in the middle of a retail boom in the economy and in the stock market. We've seen retail really struggle over the past 5 years, and right now it is time for the retail companies to shine. Now that shine won't last for very long because I think they'll go back to their sluggish ways, but right now I think it's time for the retail companies. Now I do have some retail companies in my holding. I did sell one, which was maybe a little bit premature in hindsight. But I don't think these are going to be long-term holds because I think eventually we're going to see the growth these companies have made over the last half year will level off and possibly even decrease. There's a lot of tailwinds behind these retail companies, and those tailwinds, just like all winds, will ease back. So overall, 16% gain in Dusk. Fairly happy, nice looking chart in an uptrend. Everything's going really well for Dusk. Smart Group, now it's just going sideways at the moment, down 3.3% since I bought it. I'm fairly bullish about this overall sector, this financing sector. So I do actually have two companies in my portfolio, and Smart Group is one of them. So nothing much really to say with Smart Group. It's still looking like a bullish chart. And if we get a bit of momentum moving forward, if it gets above $7, that would be very bullish. So that's sort of my target is $7. And if it gets above $7, I think we're in business with Smart Group. Energy One, this is another company I really like. Now, I thought my buy, again, was a bit impulsive because I thought the share price was going to pull back. So I bought it at $5.50 after a few days of really rapid increases, some really good announcements. And then $5.50, I just thought I'll just buy in half my allotment and then I can buy the other half about $5 because I thought it was going to drift back to $5. But no, it kept on rising and rising. So it rose from $5.50 all the way to nearly $6.50. Now, it's been trading between $6 and $6.50 for the past month or so, but that's a consolidation. It's consolidating. This is bullish. I'm liking what I'm seeing here with this chart, and I think eventually it's going to go above $6.50. Once that 20-day moving averages hits that share price, I think we're going to see another leg up with the shares. So looking still bullish with Energy One, and I think I've missed my boat in buying my second allotment. Gentrack, I think I was a little bit too impulsive with this buy. I am a little bit bullish about the long-term future of Gentrack, but I think I was a little bit too eager to buy it just because of that bullishness. Share price has only gone back 4%, but you can see a bit of volatility each week, up and down, up and down. $1.30, if it goes below $1.30, that would be really bad. So I'm keeping a very close eye on $1.30, and that could be my sell signal. If it goes above about $1.60, that would be very bullish. So SG Fleet's my second other financing company. So again, I'm very bullish. I've probably said in a video why I'm bullish. There's 10 companies within this sector in Australia, and at some point there's going to have to be some sort of consolidation. And whenever you see some consolidation within an industry or sector, that's going to be fairly bullish for the long-term future of those companies that are consolidated into. Now, SG Fleet share price did fall below my sell point, which was $2.40. Now, there's one reason I did not sell, and that's because of the candlesticks with very long tails. Whenever I see candlesticks with long tails, that suggests whenever the share price gets to between about $2.30, $2.20, there's a lot of buying, which pushes the share price back up towards $2.35, $2.40. And that's suggesting that is a really good area of support, and there's no point selling when it gets in that area of support. So we're going to see what happens to the share price over the next few weeks to see if it goes back up towards $2.60, because again, I'm quite bullish in this sector. BlueScope still is one of the big disappointments this week. So last week it looked like it moved above $18, which was a really long-term resistance price level, and I thought that was it. It's going to remain above $18, but this week it shifted back below, so it failed. This resistance line failed as sort of a false breakout above $18, and that's really disappointing. So at this point in time, still overall gain of 43%, but just very disappointing that's fallen to $17.65, back in that trading range between $17 and $18. So BlueScope, one disappointment. South32 was not a disappointing stock. It actually did move up. So still looking fairly bullish with South32. Nothing really to talk about here except the overall gain now at 20%. So I've held this for 5 months. And when you get a 20% return out of a company like South32 in 5 months, you should take it. Costa Group, the second disappointment stock. So looked like this had broken above $4.20, which was a resistance level, and then it's gone back just like BlueScope. So that was a false breakout. Overall gain 11%. I'm still fairly bullish with Costa going forward. I'm really looking forward to their half-yearly report, or the yearly report, sorry, because they're on a bit of a different schedule than some other companies. Looking forward to their yearly report, so I'm hoping that yearly report will be very bullish and that will put a kick up to the Costa Group share price. Otherwise, 11% gain, $4. It's just remaining around $4 over the past, say, almost 3 months or so. Disappointment number 3. Again, I thought another company that had broken above a level of resistance. So with Red River, that level was 30 cents. We did have an announcement this week about their transformative December quarter, but the share price just kept on falling. So it's gone back to 27 cents, still over a gain of 23 cents, and if it falls below 25 cents, that would be my sell signal. I don't know why people are selling out of this. I'm very bullish about this company. Just the management has some issues, but yeah, no idea why people sell when the share price starts to decrease. Very silly. Empire Energy. This is the company I've been just wanting to sell, and then I've just, again, patience. I've just been too patient with this. And then finally, the patience has worked off because the share price went up this week. And I've actually had an overall gain of 3%. I really would like the share price to go above about 42 cents. And we did see a little bit of a peak in volume over the last few days. So hopefully that's a sign, not a really massive peak in volume. The last peak in volume was the reason I bought in. So Empire Energy, this is still a business. More than likely I will sell, actually I shouldn't say that. There is a chance I will sell this in the next month or so if the share price doesn't do anything. Michael Hill. So finally, a company did something today, 15th of January. So this is a retail company. Again, as I mentioned before, the sun is shining on retail segment, and Michael Hill is exactly in that sector. They've had 3 positive trading updates since October, and each time we've had the positive trading update, their share price has taken off, just like it did today. It went up 7% today. Not as much as some other retail companies. I think Premier Investments went up 12%. Shaver Group went up a fair bit. Universal Stores went up 12%, something like that. So anyway, I wish Michael Hill went up 12%. This is actually much better value than all those other companies, and they've had a very good second quarter. So overall gain 39%. So very happy with that gain since I've held this company now for 2 months. So a 2-month gain of 39%. You have to be happy with that. I did mention here low volume was a concern, so it was a concern. But today's trading, we did see some fairly high volume, so that might be bullish over the next few trading days, which is next week now. So update week now, I've changed this a little bit. So what I've got is share sites, and you can track your share sites or your performance of your portfolio using share sites. So, and you can have a benchmark. So what I've used as my benchmark is the Vanguard Australian Shares Index. So you can see the performance of my portfolio is 21.59%, and that compared that to the benchmark is 11.69%. Really like this because this takes into account dividends. Also, if you just look at the capital gains, my portfolio is 21%, and that's beating the benchmark by double, which is my ultimate gain, which is 10%. And you can see all my, I've included also the shares I've sold. So Citadel Group, Mosaic Brands, and Treasury Wine. So overall, yeah, I'm very happy with the performance of this portfolio. That's double the benchmark, so I'm very happy with that. And indeed, that's exactly what I want. Now, these companies close to buying have had these in my close to buying list for a long time now. Again, sometimes I'm too patient. It happened with Mac. I should have bought $1.20 and then it took off. It was a perfect buy signal at $1.20, ideal buy signal. I just was too patient. Dacian Gold, I had it buy price at 46 cents. Got to 47 cents yesterday. I should have bought it at 47 cents. And SRG started taking off as well. So I think what I have to learn is to become less patient and use my more impulsive side of myself to make some decisions. I think maybe there's more of a compromise between the two. I think find a compromise, because sometimes it can be too impulsive. I don't want to become too impulsive because I can make some rash decisions that way. So anyway, that's it for updates for my week 9 momentum sentiment portfolio. A fairly good week. I think my portfolio overall was up 2% this week, thanks to that one company, Stonehorse Energy. Disappointing week for BlueScope, Costa Group, and Red River. Hopefully they have turnaround weeks next week, and that's what you usually see is companies that disappoint one week can have good weeks the next week. So I'm not a financial advisor, so just because I bought these companies doesn't mean you have to. Also, you should make your own decisions based off your own investment strategies. But that's all for today. Have a good day. I'll talk to you later. Bye.